now that's in the works.
Okay, unchanged. That's a big one. There's no rate hike at all from the Reserve Bank of India. So the RBI has kept repo rate unchanged at 6.5%. That would be a big initial positive, but we'll see the market reaction after that. But Lata is here with more details. Lata?
Yes, it's a big surprise. No hike in 5:1 voting in favor of pause. But they have tightened the stance. The decision of the MPC is consistent with the stance of calibrated tightening of monetary policy. Last time it was inconsistent with the neutral monetary policy stance. So calibrated tightening is what it has changed to. More important news is that they have revised lower the inflation forecast. The inflation forecast for the second half was 4.8 originally. Now it has come down to 3.9 to 4.5. 4.5, 30 basis points cut. And for Q1 of next year, it was originally 5. That has come down to 4.8. So a good 20 to 30 basis point cut in the inflation forecast from the previous estimates. And GDP growth retained for the current year at 7.4. And for the first quarter of next year, it has come down. Originally, the estimate was 7.5. It has been brought down to 7.4. Now, what were the reasons given for the pause and for the bringing down of the inflation trajectory? It is the unusually benign food inflation and the exceptionally soft prices of sugar, fruits, vegetables, edible oils, pulses. So basically, food inflation undershooting is the reason. And they say they have taken into account all the MSP announcements in the current projection. So very, very dovish compared to what the market estimates were in terms of inflation. Important to note that even in the stance, it's a 5:1. 5 have voted for tightening and 1 is neutral, which is Dholakia. But when it comes to maintaining a pause, one person has voted against. That is not an RBI person. That is Chetan Ghati, which means RBI as a whole has voted for a pause.
Lata,
and I would think that counts as fairly benign.
Lata, I tell you something. There's a massive move in the currency, big down, and the market really thinks that this is perhaps this hurts a bit of a credibility here. And if you have, in fact, if you look at the Bank Nifty as well, that's now sliding after, of course, from the high point. It's seeing quite a bit of decline, but the move on the rupee is clearly the one that's telling you that after that initial cheer, of course, that you saw in the market, it's now selling off.
Yeah, but that's a little surprising. I mean, they're seeing it as RBI not worrying about the currency, which is why I think the currency is selling off. We'll have to wait and see. That was always the fear, but probably they've maintained the orthodox outlook that they are inflation targeting and have not provided anything for financial stability. Or maybe the interpretation is that the debt market and financial stability required a benign outlook. It's a little surprising, but maybe you want to go to the experts. First up, Sajid, what did you make of this?
Lata, for the reasons you mentioned, a bit surprising. I think it comes down to, we've been saying for a long time that the framework should not change. The RBI should be basing monetary policy where inflation is going to be, 2-3 quarters down the line. I guess where our estimates are a little bit different is the risk to inflation to the upside, because we've seen this big move in oil prices and the currency. It's undoubtedly the case food prices, as I mentioned just before the rate announcement, have been unduly benign. But it comes down to where, how you forecast inflation. We forecast inflation to be above 5.
Yeah. Yeah. No, to be fair, they have given an upside bias to their forecast of 4.8. But nevertheless, the forecast is lower than what they forecast in August. Very quickly, Taimur, what would your first thoughts be? Would you worry for the currency at all?
Well, I mean, first and foremost, I'll be blunt. I think it was a mistake. The whole world is going through a major recalibration in terms of monetary policy, and India does not live in a vacuum. So the fact that the Fed is raising rates, the fact that emerging market economies are raising rates, it sort of puts the onus on the RBI to also not be sort of left out. That's issue number one. And the second issue is, of course, given where demand and prices are right now and where the outlook is, it makes sense to remain on the hiking trend. And the fact that the rupee has already sold off so much, it doesn't help the fact that they're taking a pause today.
Point out, Lata, just to quickly comment on the equity market
before
reaction.
Before I go to the bankers, can you update
Yeah, Lata will do that.
It's not the equity market reaction I'm worried about. I'm more worried about bond and rupee.
No, currency Lata sold off. Immediately as soon as it was announced that there's no rate hike, currency sold off, which was, I think, a no-brainer because the market wanted, the money market actually perhaps wanted, even a 50 basis point rate hike. That didn't happen. Of course, 73.98 is what we have on currency, Lata. And I think the bond market is also, Hassan will tell me the last.
We've actually hit 74 on the currency. 74.01 is the low that the rupee has hit.
Okay.
And the bond market,
this yield is not getting updated.
Can you just update me on, me on bond and equity, please?
No, I think this rate is not getting updated. I think we have a bit of a delay issue here on the bond yield. It's showing 8.14 right now.
Okay.
But I think it was the same at the start of the policy. So I think we'll perhaps wait for a bit for that.
Okay.
Yeah.
But are not the equity markets delighted at all, Anuj?
Equity markets are collapsing, Lata, right now. In fact, 200 points down on the Nifty and about 150 points. The Bank Nifty was holding out in the green through the day. And this has been, used to sell into. The base case for the market was if it was going to be hawkish, initial fall, but then the market will recover. But if it was going to be no rate cut, then initial cheer would have been sold into, and that's exactly how it's played out.
Okay. Now, I don't know whether you can call it very, very dovish. I mean, it's not a cut, but then it has tightened its stance. So indicating that there is obviously no more chance of a cut. But therefore, a hike is expected sometime in the future, maybe sooner rather than later. But this is definitely a surprising reaction from the market, especially because the currency markets have taken it very, very badly. It's quite possible that in the press conference, the RBI will be able to explain its stance better to the currency markets. So maybe we should hold out. Pawan Kumar Bajaj, your view on the reaction of the currency markets and how would bankers react?
See, Lata, market was expecting minimum 25 basis hike or even somewhat 20% participants were expecting 50 basis hike. But there is no hike, only its stance is changed, that is at calibrated tightening. And with that, this rupee market has gone, it has gone past 74 and now it is going at 74.08. I think its market is not expecting the status quo. That is the reason that dollar rupee has gone on the higher side, and it is mainly on the crude pricing and overall scenario of the US economy. I think right now, because I am not able to see anything, but initially, yes, some fall would be there.
Sajid, if you can hear me, I just have a question for you. In the way, obviously, the rupee market has reacted because no moves coming in. Even the way the equity market is reacting, the fact that the central bank, and the statement, I'm reading the statement right now, they of course do note that the Indian basket of crude oil has increased sharply by $13 a barrel since the last resolution. But despite all this, they've actually lowered their inflation projections. I mean, is that creating some kind of an ambiguity issue? That at a time like this, there's a brief mention that there are risks somewhat to the upside. This sort of language to describe inflation expectations and the inflation trajectory. I mean, is this what the market taking so negatively, Lata?
Surabhi, I want to hear... no, Surabhi, I really want to hear Sajid on this. Sajid, would not at least bond yields fall?
Well, it really depends on what the future holds, right? So in the sense that we've been saying in the past that the more preemptive central banks are, the less you eventually have to do. Now, Lata, what you're saying is the stance is calibrated tightening. So the fact is, we're still not going to rule out more rate hikes in the future. I think so if you remember, just before the rate, we were discussing these two conflicting forces where the undershoot for food prices has been so large and so consistent that yes, the headline CPI numbers for the next 3-4 months will undershoot the previous projections. But the question is, if you keep projecting 6-9 months forward and you assume that oil prices stay where they are and the rupee stays where they are, then those inflation numbers go meaningfully above 5%. So it really depends on what your inflation horizon is. Lata, in terms of asset prices, a lot will depend on where people were positioned, but you've got to take a longer view. It's not just today's decision. The question is, what does this imply for the rupee, for inflation down the line, and therefore what will the RBI have to do eventually in this cycle?
Okay. Well, the RBI is clearly convinced of the inflation trajectory undershooting. This was a central bank which was held guilty for overstating inflation. And the entire lot, Michael as well as Viral and the governor have, voted for a pause and for tightening of the stance. I would think it was a very studied decision, and maybe it's also keeping in mind the dislocation in the corporate bond market and the impact it might have on yields. But yes, we will have to check out with the Reserve Bank in the press conference what they have made of the currency moves. Reserve banks don't normally talk too much on the currency at all, but we will have to see in this particular situation whether they want to make a comment on why they did what they did. Mr. Mahajan, what do you think? I mean, obviously there are no deposit rate or lending hike expectations, but what does this mean for a bank like you? Would it mean gains on the, at least on the portfolio?
No. If you're looking at the portfolio, it won't mean much of a change. In fact, how we were seeing is that looking at the inflation numbers, and RBI has always said that when inflation numbers are, they would be targeting their monetary policy as per inflation numbers. So that is where we don't see much of a change as far as this stance is concerned, because what they're saying calibrated tightening as well. So markets would be cautious and would be.
Let's do one thing. The market's moving a lot. 2:41 p.m. We'll have the RBI governor also, making a statement soon. Before that, let's take some trades. Ashwini, very volatile this last 15-20 minutes on the index. If you see the bank nifty, and if you see the currency in particular, how are you trading this move?
See, the good news or good luck we have is that we have been falling for several days. So maybe, market is positioned for any sort of bad news also. So the volatility is over, and bank nifty is still holding on to today and yesterday's low. My sense would be that market will move on and go through with its pullback as was expected, because we should have broken the lows on bank nifty, because this is a bank nifty event. For that, I think this has gotten priced in, and we will go through our normal pullback. I don't see any extra selling happening at this point. If currency falls further, maybe 74.50, etc., then there may be further trouble. But for the moment, I think things have stabilized.
Okay, yeah, by the way, Reliance is the one which is dragging the market quite a bit. Taimur, I heard you say that it's a mistake. Clearly, the rupee market has given that verdict that it's a mistake. Equity market, you could argue. But what next for currency now? We had this move. It looked like 73 was being defended till last week, and now we have 74.
Right, and when I say it's a mistake, I'm not saying it in the context of whether it hurts the rupee today or hurts the bond yields today, sure, or anything for that matter. I mean, this is a question much bigger than the short-term fluctuations in the asset market. My basic point is that we are in a global tightening environment, and India is not in a vacuum. It's not a closed economy. It is importing a lot of the global shocks, whether it is oil or the capital flow tightness that we have seen because of the US Fed hikes, and the central bank cannot be impervious to any of those issues. Now, if we take a very narrow view on where the inflation is, and does it make sense to sort of pause right now, I think the clear question is, what is the impact on expectations? If the central bank is not hiking rates at a time when, whether it is oil or the weak rupee, everything is sort of weighing in on sentiments. And that is a critical issue here. It's not just a question of whether the food prices have surprised on the downside. The question is what is happening to expectations and sentiments. I cannot see the ongoing developments in the global economy being helpful as far as inflation expectations are concerned. And I would like to think that an inflation targeting authority like the RBI would keep that in mind at the very front and center of its decision-making process. So that's my sort of take. So when I say that the RBI is sort of making a mistake, that's what I mean, that they ought to be sort of taking clues from the global developments, not just from domestic developments.
By the way, while our bond yields have cooled off, we're quoting at 8.07, 08, those kind of levels after the announcement. The problem where it all started about 24 hours or 36 hours ago, the US 10-year is still hovering around 3.2%. It's gone back to that psychological zone. I mean, that's what we've been talking about.
But you know what? Interestingly, the market's again bouncing back, especially on the Nifty Bank. It's again moved into the green. 60 points higher, 75 points higher is what you have on the Nifty Bank. Nifty's problem is Reliance.
Yeah.
Absolutely no doubt about it.
2 days in a row, 5%.
4 days in a row. If you see the 4-day move on Reliance, I think it's a rather steep one. So 5% gone now on Reliance.
Absolutely.
But the Nifty Bank is rallying, Surabhi, now. About 82, 83 points is in the green for that particular
Can't take away from that, Anuj. And ICICI Bank is doing its bit. That's the one banking stock that's definitely helping the case on the upside today. Just on Ashwini's point, I mean, how long this market's been falling, out of the last 13 trading sessions, only 2 positive closes. 11 down days, I mean, almost in a row you could count, barring those 2 sessions. That's the extent of the equity market fall. However, currency is a talking point. And Sajid, I just want to get back to you. Okay, the governor should speak any moment. Just before that, today 74 was crossed. And sort of what next on the rupee?
Oh, that's an unknowable question. I think the point that Temur made is a very good one in terms of the environment that emerging market current account deficit countries are facing.
Monetary policy